And we are officially alive yet one more time, broadcasting only on onedealaway.com/live. This is Money Matters. My name is Nav. And today we have an incredibly special episode where we're going to talk about, well, money. And specifically, we're going to be talking about a few different features that are happening in the world around us. For one, we do want to talk about the US dollar collapse. Is it or is it not? It is something that is important for you to understand. Now, because we also focus a lot not just on money, we also focus on the markets and stuff, we're going to take a very quick snapshot of what's happening in the marketplace. I'm going to look at the major indexes. We're going to look at gold. We're going to look at crypto. We're going to be talking about what is one state that people are leaving in droves. And it's not New York City this time around. I have another one. Nope, not California either. So if you are looking to start a business, build a business, or get into real estate, you absolutely want to understand what state you maybe should not necessarily go into. Again, nothing that I share in this episode or in this show whatsoever ever is financial advice or should be used as such. It's just a matter of delivering the news and opinions. And then finally, we're going to be talking about the new SPAC. SPAC. We talked about what SPACs are quite some time ago, but today we're going to revisit it because we do have a new one that is forming and that is coming in that you might want to know about because it involves somebody, relatively speaking, famous, depending what circles you kind of go into, but one of them is Reid Hoffman. So, we're going to be discussing a whole bunch of stuff, and you definitely want to be here for that. Let's do this. And good morning. Happy, what is it, Tuesday? It is. It's Tuesday, September 1. So happy Tuesday, happy September. We have only a few short months left of 2020. And I know many of you are thinking, Mike, hallelujah, glory. Let's get rid of this puppy. Bring me 2021. Maybe it will be better. Maybe, maybe not. Nobody knows what the future may hold, but we can always take educated guesses as to what we can expect when it comes to, well, money and business and that kind of stuff. And of course, this year, as much as I'm saying it's going to be a few short months, those are also going to be very, very long months. And I know now I am going back and forth on things, but the reason that I'm saying it's also going to be potentially very long months is because it's an election year, as I'm sure you are fully aware, right? So thanks for pointing it out, Nev, fully aware. So it could potentially be very, very long and very ugly. More ugly than what we experienced, just different kind of ugly. And it's already begun to look at that. And I think we can expect to see even more of that by the time we approach the elections in November. So the next, 2.5 months plus minus are poised to be probably even more explosive, more back and forth, more negative news, more riots, more dissatisfaction, more, and unfortunately not a whole lot more of good stuff. But my purpose in life is to always find good stuff, even when things are kind of ugly. And of course, we're going to do that today here as well and talk about, while things might be ugly and there might be some sort of scary news, one of those news likely you have heard about is, real estate crash is coming in fall of 2020. It's not. It's my statement that I'm going to make. And of course, part of the thing within that piece is that, real estate is very localized. So while it could crash in one city or one part of the city, the other part of the city could be booming, right? You could literally have a street, at least in United States. Now in Europe it's a little bit different, but in the United States it's very, very specific, very centric. So you got to go microscopically small in order to understand what's happening inside your market. However, we do have other markets that are, well, not all that small at all, and they're relatively speaking quite large. And one of those is Dow Jones Industrial Average, and as you can see, slightly down yesterday. Let's look at what's been happening over the 5 days. And as you can see, we've actually gone up. 1 month we're up, 6 months we're up. Year to date, not so much, but we are getting pretty freaking close. Let's take a look at NASDAQ. NASDAQ is up, 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 up. Right? I mean, this could be. I'm not a songwriter, but look at this. This was the February high, and we surpassed that puppy long time ago, and are going up, up, up. And of course, it's predominantly what, about five-ish stocks or so that are driving that whole thing. So if you think that it's an entire index, it's really not. It's five stocks that account for all of the gains that you are seeing on the screen. And of course, those are those big tech companies that I'm sure you know the names of and probably have in your homes, maybe even using to watch this stuff, right? So let's see, S&P 500 down for the day. 5 days is up, 1 month is up, 6 months is up, year to date is up, 1 year up. I mean, it's on up. So the stocks are going up. What's happening with gold? That's a question that we all have. And as you can see, gold kind of went down. This is end of August, right? So we were down in like lower 1900s. We're now in the higher 1900s. So we did break that 2000. We did come down. We're going a little bit sideways right now. But overall, the gold is actually doing pretty well. It's also on up. Silver spot price, pretty much the same story, same thing kind of happening. And the interesting piece is that the gold silver ratio is starting to come on down. If you recall, gold silver ratio was well over 100, what, a couple months ago. And now we are down in, we are flirting between low 70s and high 60s. And of course, there's a potential that is going to go even lower because historically speaking, this puppy is much, much lower than we see it right now. Now, I do want to take a look at the other super large global market, and that is crypto. And inside the crypto market, let's see, how are we doing? Well, BTC is up. And while it's sort of slightly downish in the last hour, as you can see, like a tenth of a percent, it is closing in on $12,000 yet one more time. ETH has exploded, y'all, at 471. In the 7 days, it's up well over 15%. And that is quite exciting and interesting to see because only, I want to say, what, 2 days ago or something like that, was still below 400. So if you have bought some ETH when it dumped, which you should have maybe done, again, not financial advice, you would be sitting pretty right now. Let's see the other ones overall, looking at the market and we're going to be looking at the 24-hour period, right? So we want to focus on this one right over here. Overall, as you can see, it's mostly in the green, not a whole lot of red here, and when there is one, it's fairly low. Let's take a look at the biggest gainers. Sushi. I don't know what sushi is, but let me tell you, we're having like spaghettis and yams and sushi. Well, somebody put in eggs and bacon and steak, and we are good to go, man. We got the full menu. Maybe a salad, right? Not everybody eats all this stuff, so let's get very diverse with the names of our crypto. As you can see, sushi is up well over 200%. Yam version 2 is up almost 100%. CRV curve is up 47%. Ampleforth up almost 40%. And it was like in 60 cents or whatever. Now it's like almost $2.50. I mean, congrats to the Ample Same thing for YAM version 2. UMA, I don't know what that is. I'm going to have to look it up. UMA, up 28%. SRM, as you can see, it just kind of goes down. But I mean, really, really, really strong market. Let's see on the dumping end of things what's going on. And the biggest one is BZRX. Again, I don't know what this is. I'm much more familiar with names than with codes, so I always have to look it up. But it's negative 12%. Nest down 10.6. Luna is negative 7 almost. RSR negative 6. Numerator down 5. Engine down 5. Ocean down 5. VChain is down 4, and then it just kind of goes down from there. So overall, not a whole lot of uh, things that have dumped. Overall, market is really, really good and really, really healthy. And of course, every time the things pump, it kind of has to, cool down a little bit, and then it kind of continues pumping on some more. So now it's time to talk about the one of the articles that I wanted to bring up, and that is about the tech-focused SPAC that is about to list on exchanges. So, what are we talking about here? Excuse me. Let's do some water. So, Reid Hoffman, Zynga Mark Pincus aim to raise $600 million for tech-focused SPAC. Now, before we go into this stuff, actually, let's read this and then we're going to explain what SPAC is. Reinvent Technology Partners, a new special purpose acquisition company, SPAC. Special Purpose Acquisition Company, formed by famed investor and serial entrepreneur Reid Hoffman and Zynga founder Mark Pincus and veteran hedge fund manager Michael Thompson, filed Monday for a $600 million initial public offering. And now you might be asking yourself, well, what does this special purpose acquisition company hold or does? Well, it doesn't hold anything right now. So if we jump over to Investopedia, we're going to look and read what SPAC means. Special Purpose Acquisition Special Purpose Acquisition Company, company, with no commercial operation, that is formed strictly to raise capital through an initial public offering for the purpose of acquiring an existing company. So basically, if you put two and two together, they're forming a blank check company that holds nothing and does nothing, and it goes out on exchange. And then what's going to end up happening is that once it goes out there, once it lists, once it actually gets some money, then they're going to hold on to that cash, and they're going to go shop around to see what companies are poised to potentially perform really, really well, but are financially struggling, so they're going to buy it at a discount. Now, this IPO is different than a traditional IPO, right? If I was to have a company that, say I had a tech company, right, that was producing widgets, whatever, and, I would go in and I would have to file for IPO and list my widgets and list my past performance and all of that stuff in order to qualify to go into an IPO, right? I would have to have product and services and show how much money, we have actually made, and share my balance sheet and income statement and the whole set of financials, right? And the team and everything else, and go through a deep scrutiny. However, if I just said, you know what, I want to acquire a tech company and I just need some funding, then I form a special purpose acquisition company. I listed for IPO. There's no need for financials because there isn't any. And it really is go out there, and it's crowdfunding, so to speak, except it's kind of like through the public offering. So it's not exactly crowdfunding. And everybody goes in, then the people pile in, they buy the shares of my stock. Now I have this money kind of sitting into my little piggy bank account. And then I can go shopping. And once I find something, then I can acquire it. And that's kind of what the process is. So that's what they are doing right now. Once and if the Reinvent Technology Partners raise the $600 million, the capital will move into a blind trust until its management team decides which company it wants to acquire. So you basically put money in and then, hope that they will acquire something that will make money long term. Spanks. SPACs, not Spanks. SPACs are blank check companies that are formed for the purpose of merging or acquiring other companies. Increasingly popular means in 2020 for venture backed companies to go public without having to take a traditional IPO path or submit any of the financials. And of course, they're talking a little bit more about it, but one of the most important pieces that I think is for you to understand is that this is what they have actually released. So here's a letter from Hoffman and Pincus, which was included in the filing. And they're basically saying for many public tech companies, especially mid cap size, cycles can provide challenging to navigate while maintaining investor alignment. We are excited to be a new kind of venture capital partner at the table for one of the many tech companies set to go public over the next few years and to help it maintain a growth mindset. So, their entire job and purpose is to basically use their name, knowledge, and connections to get as much money as possible and then go out there, buy a company, and attempt to grow it. Now, sometimes these specs turned into sort of the private investment piece where they just suck all of the value out, leave an empty shell of a company to crumble and die, and they walk away with cash. I don't know if this particular one will do that. It doesn't sound like it, but then again, sometimes, things may not always appear for what they are, and we should be very, very aware of it. So that's one side of the business news. The other side that I don't actually have over here is that the JC Penney's is struggling big time, and some of the buyouts and that kind of stuff of what they were hoping to do from their bankruptcy, it's not really happening. As you likely know, is that Vegas is basically laying off everybody. Airlines are laying off everybody. So a lot more pain, a lot more hurt is coming, and there is no sign whatsoever about the additional stimulus kind of coming in. But to be honest, as I was sharing with you for the past few months, I wasn't expecting anything until after Labor Day, which is basically just a week away. So at that point, we could actually expect to see some sort of movement. Now, will they actually pass something, not pass something? I don't know. But what I do know is that's the time, that's the earliest that we could potentially see something because our government is on vacation. Yes, they are. Yes, they are. And so people are looting, rioting, burning, killing, beating, doing all kinds of insano stuff. But the government is on vacation. So there goes that. Those are kind of some of the news. On the more exciting side of the news, is you likely may or may not have heard that I used to. So this is a very personal thing for those that have known me for a very, very long time. Is I used to talk about the fact that we will see flying cars. Japan's flying car. You have to see this. You have to see this because people used to make fun of me all the time. I had pulled it up and then I guess I killed it. Um, but I used to always talk about the fact that we are going to see flying cars happening in the near future. And my team and everybody that knows me used to make fun of me all the time. And every time I had asked my team to develop some sort of something within the tech and wanting stuff, they would say, you and your flying cars, right? So flying cars became a synonym for them saying never gonna happen. Well, eat your heart out. Japan's flying car gets off ground with the person on board. Hello. Amazing piece to see right over here. Hold on. Let me see if I can go back. Look at this. Japan's flying car. And yeah, I mean, it's kind of funky looking, but if you really think about it, it is. It hovered off, and a person is in there, and I think it kind of hovered for about 4 minutes or so. So it didn't make it, too far. I mean, sort of like a car slash chopper slash whatever, right? And look, all these people are just as excited as I am because this car is airborne. So there you go. Eat your heart out for making fun of me to say that flying cars are coming. Folks, I don't know that I can always explain to you how and why I get these crazy thoughts and ideas, but I know I do. And over time, I have learned to trust them. It's sort of like an instinct, a gut feeling, a premonition, whatever you want to call it. And I'm not trying to say that I am Nostradamus or anything like that. Far, far, far from it, nor do I want it. It's just that sometimes I see something and it hits me and I can't explain it and it's super crazy. And I know how crazy it sounds when I say it out loud. And yet, over time, magically, it ends up happening. So that's kind of what's been happening with a lot of things. And people that have been hanging out around me for a while, they have known me for a while, they have seen my crazy thoughts and ideas that just somehow miraculously come to fruition, are starting to say, I don't know how you do it, but I'm starting to trust it as well. So there you go. That was just one of the things that I wanted to share with you because I just, when I saw that, I mean, and I'm actually waiting for some sort of normal hour to send this article in text to all of my friends and colleagues and say, eat your heart out. Anyways, anyways. So, one of the things that we have heard is that the dollar is going to collapse. It's going to cease existing. You know, you shouldn't have it. Blah 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 blah. And meanwhile, I am still pretty darn bullish on the dollar. Now, will it devalue? Sure, it will. Sure, it will buy less, right? And that's the reason why we want to invest our money and move our money because velocity of money is what helps us continue to grow it, right? Otherwise, it's called dead money, and dead money is useless. So we always want to move our money around, right? And we want to invest it and we want to do stuff, but the dollar is, I stand, is not dying. And I was kind of interested to see when I saw this come in to say, well, let me see what they have to say. So here is basically their arguments, and I actually really do agree with a lot of these things. US dollar index has lost 10% from its March high, and many press comments have started to speculate about the likely collapse of the US dollar as world reserve currency due to this weakness. The US dollar year to date, August 2020, has strengthened relative to 96 out of 146 currencies in the Bloomberg universe. And as you can see right over here, the U.S. Fed trade weighted nominal dollar broad dollar index is the green one, right? And the dollar index spot is the red one over here. And while yes, we have gone from this high kind of down, right? We're starting to see a little bit of an uptick on up. Now, will it do another one of these dead cat bounces, as they're called? That's really what it's called. Not trying to be evil, but that's what it's called in the trading world. Or will it, really go up? We don't know. The speculation about countries abandoning the US dollar as reserve currency is easily denied. Bank of International Settlements, which is basically the central bank of central banks, reports in its June 2020 report that global US denominated debt is a decade high. In fact, US denominated debt issuance year to date from emerging markets have reached a new record. Now, what does this actually mean? We're going to pause over here. I'm going to put the chart, have a water, and then explain. What this basically means is that when companies or when countries borrow dollar, right? So you want to read this piece that says global US dollar denominated debt is decade high. That means that they have borrowed in US dollar terms. And of course, in order to pay it back, they need dollars. The problem is there's not enough out there. And I know what you're thinking. Wait a minute, Nev. How is it possible that there's not enough out there? I mean, they printed trillions, but not enough. We lost a lot of trillions through the shutdown, right? And a lot of these trillions are not moving around. They're sort of sitting dormant. They're sitting dormant on the whales, let's call them that. I know that that's a term in crypto, but I think it applies to financial world as a whole, right? Of sitting on these billions and even trillions of cash that they are not touching, from banks to billionaires, right? Like, I mean, what was it, Buffett? How many hundreds of million, or sorry, billions, please, millions. To him, that's like pennies. Hundreds of billions of dollars on cash is he sitting on, right? And there is, that he's not moving them around. He's just sitting on it. And so many people are doing the same thing, which means that there's dollar shortage. Well, when there is a shortage in supply and demand doesn't shift, what happens? Well, we get price going up. And so when they borrow all of this money in dollars, they actually have to pay it back in dollars, meaning they need dollars in order to pay it. And so that's kind of where we are right now. The US dollar index, the XY, shows that the United States currency has only really weakened relative to two currencies, the yen and the euro. And this is based on optimistic expectation of European and Japanese economic recovery. So, one piece to talk about is what's currently happening in Japan. It's kind of important. There are two pieces of news that I want to share with you when it comes to Japan. One of them is that Shinzo Abe is actually stepping away for health issues. So now we're talking about of internal political, turmoil, not as like prevalent as in United States, but definitely some movements and shaking over there. So that's one. The second one is Trump, not Trump, Buffett. Warren Buffett has invested in Japan. So he's actually, you'll be able to look up the news about it and dig more into it. But that's an important piece. There is this bullish sentiment about Japan potentially performing well or slightly better and stuff. But that may or may not come to fruition. Now, when it comes to Europe, Europe is having its own set of challenges. Now, part of it is coming from the fact that they're saying, well, they are, they're reopening better and stuff. Well, maybe not, because they reopened and they had to shut down. Then you could travel, but then you couldn't. Then you would go to the country and they would like, it's a hot mess over there just as much as a hot mess over here. Different kind of hot mess, but a hot mess nonetheless. And yes, you can call me Dr. Seuss for the moment, I guess. Okay, enough of the rhyming. Anyways, what we are basically seeing is that there are different things to consider, and part of the thing to also note is that, as they put in this article, is that both European Central Bank and Bank of Japan conduct just as aggressive, if not even more aggressive, financial policies than the United States. Now, what we have witnessed between March and August has just been a move back from an overbought exposure to the DXY index. Economies do not become more competitive or deliver stronger growth and exports with weak currency. There's a belief that it might. There's some things that they're saying emerging markets are showing that that's not really the case. But then again, can you compare an emerging market with the market that has emerged already, right, so to speak, and has a world reserve currencies? I think that that's kind of comparing apples and oranges. Both are fruits, right? Both is fiat, both are countries, but it's different kind of fruit. And for all I know, you could be allergic to one of them, right? So you can't really compare it. It's not the fairest of the comparisons. US dollar world reserve currency status is not at risk, and it's simple because there are no contenders. Euro has redenomination risk, Nev, and the constant political and economic concerns about the union solvency, and they are struggling all the time back and forth. Countries want to enter, countries want to exit. What's going on? They can't agree on things. I mean, they did roll out that European bond and stuff, but that, took forever. So they're having their own problems and challenges, right? So that's not that easy. Then you can look at China, for example, and yuan. And yuan cannot become a world reserve currency if the country maintains capital controls, and concerns about legal and investor security remain. and they control a lot of different things. And of course, what we've seen happen with the Hong Kong and stuff, basically China shot itself in its dancing foot, as I like to say. So yeah, that's the one that you can move really fancy. You know, when you're dancing, there's always one foot that just performs slightly better. Sometimes it's right, sometimes it's left. I'm not judging, but I call it a dancing foot. As you can see, I have all kinds of funky names for stuff. But I think it's true, right? So people have saw that and saying, I don't know how much I trust you, China. You take advantage, you could beat me up. The other piece that also shot, the China shot itself in a dancing foot, is what happened during the whole like beer overflow, issue and challenge and stuff that we're still kind of dealing with. Was that, when China was having, again, I received this news. I think it's reliable, but do your own verification as with everything. But my understanding is that when China, because they went first, right, was dealing with it, that a lot of the European countries were sending stuff over to China for free, like the PPP stuff, or not the PPP, the PPE, not the payment stuff, the protection gear, right? Was sending all of that stuff to them and kind of like wanting to help and blah blah blah. And then when Europe went down, China went back and then used what was gifted to it to sell it back to those countries, and that did not go well for political reasons. So while China potentially might have made a bit of dinero doing that kind of stuff, it also shot itself in its dancing foot long term for all kinds of political reasons, right? So we could all learn something here as business owners, entrepreneurs, investors, and stuff, is that don't just focus on the short term gain. Look at the long term game that you could be playing right here, right? So, sure, you can screw somebody over, sorry to be so blunt, and, get that dollar. But when you do that, you shoot an opportunity to make hundreds or hundreds of thousands of dollars in the future. So you always want to look long term. How do I treat you so well right now and into the future that you will be my customer for forever and keep coming back, and I'm going to give you more and over deliver so that you will continue to want to pay me, to want to come back, to want to work with me. So we got to learn that stuff, and China hasn't learned. So for all of those reasons, yuan not going to happen. Now, could it be some sort of crypto something? Sure, but I don't think that's going to happen right now, because right now you still need fiat to roll into the crypto stuff, right? And when you do that, there's all these sort of barriers to entry, right? You got to submit all of your information and your ID and all of that, right? That kind of stuff, because of know your customer component that all of the banks and businesses have to have, because governments are saying we have to have that information, right? And then you enter into the thing. But what we are also seeing, that I have shared with you on many, many, many occasions, is that the digital currencies, the cryptocurrencies that are sort of central bank controlled and created, are coming. Once they do that, there's going to be some sort of mechanism that these are going to communicate with one another. And once we get that, we could see something like Bitcoin, for example, become sort of this financial reserve that you hold and that vast majority of people hold. Now, many people hold it right now, but not vast majority. Market is still super, 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 super tiny. It's microscopic comparing to other stuff, and we've already looked at some of those things in the past. So we are living in a period of unprecedented financial repression and monetary expansion. The US dollar reserve status grows in these periods where countries ignore real demand for their domestic currency and decide to copy Federal Reserve policies without understanding the global demand for their currencies. And then, of course, when the tide turns, most central banks find themselves with poor reserves and lower demand for domestic currency risk, and the position of the US dollar as a reserve currency strengthens. So, this is kind of where we are right now. This is not a year of a US dollar weakness or the end of its supremacy as reserve currency. What we are witnessing is a generalized fiat currency debasement through extreme monetary policy. And I absolutely agree with it. And now you can kind of see this beautiful chart of dollar versus US dollar versus fiat, and US dollar versus gold. And versus fiat, we are doing just fine, but versus gold, we're actually going down, or gold is going up, depending on how you look at it. All right, so the US dollar will likely remain the most demanded fiat currency, but the excessive monetary stimulus would ultimately damage the confidence in most fiat currencies, which is going to bring the rise to things like gold, which it already has, to cryptos, which it already has, but it will continue to do that even more so. And of course, people are going to start going into different assets that are poised and have been poised for a very, very long time to preserve your wealth and not just keep pace with inflation, but beat it. And one of those things is real estate. Yes. So that is why I am bullish on all these different things. And of course, short term, I am also very, very bullish on the dollar right now because it was so cheap, because I understand where things are going to go and things are going to turn around. So, with all of those things said, I am still very, very bullish on dollar, very bullish on the bonds because as these rates and interest and that kind of stuff continue to drop, the prices of the bonds will continue going on up, and then when I sell it, I end up making money two ways: one from increased price and one from the passive income that bonds provide. Now, of course, I like having some cash because it's always good to have when you need to go in and buy stuff and invest. And of course, then the other assets, well, they kind of play a little bit of offense, a little bit of defense, and you want to structure your portfolio in that very way where you have some, people that are going to, or people, assets that are going to be more on the offensive, sort of the call option as they call it, and a lot of the crypto kind of does that. Then you have sort of the fallback option of like everything implodes. That's where you have gold. Cash gives you ability to be very, very flexible. And then of course you have this like very long term sort of stable asset that just gonna sits there and takes care of you super long term. Again, nothing here is a financial advice, nor should be used as such. You should get a financial advisor if you feel like you need one. You should do your own research. You should do your own thinking. And you need to consider your own financial picture of where you are and also consider your age, where you want to go, and that kind of stuff. So, all of those things are important. And finally, you've been waiting for this particular piece that I have shared with you and explained, and it has to do with what is the state that everybody seems to be leaving. And we've talked about the fact that many people are leaving California, so it's not California. We've covered it before. We talked about the fact that New York City, man, people are fleeing that place like there's no tomorrow. It's not New York City either. Now, we didn't talk about the fact that Chicago is being fled out of, but people are fleeing Chicago as well. Portland, well, we've covered Portland, and people have left Portland quite a bit, especially businesses downtown with all these burning and beatings and everything else that's happening. Baltimore has seen its own little exodus as well. And you will notice that just about every major city is seeing people fleeing. But here is the state that everybody is leaving, and it is New Jersey. That's right. New Jersey is becoming the most hated state as households flee in record numbers. A new tax of millionaires, a 22.5% gas tax hike, bringing the total increase of 250% in 4 years. Ouch. And now a tax on high frequency trades. New Jersey is now actively trying to drive out its tax paying population and top businesses. And of course, they are leaving in droves. According to the latest data from United Van Lines and compiled by Bloomberg, people have been flooding into Vermont, Idaho, Oregon, and South Carolina. And when we talk about these, they are going there, but they're not going to the major cities. So keep that in mind. They're close to them, just not inside them, right? It's kind of like I want to go shop into the mall, but I don't want to live in the mall, right? It's kind of like that. So, eager to flee such financially challenged, high tax, protest swept, Democrat controlled states as Connecticut, Illinois, and New York. But no other state has seen as great exodus as New Jersey, where out of every 10 moves, 7 have been households leaving the state, or nearly 3 times as many moved out than moved in. So over here we have a beautiful chart where it has the outbound and inbound. Let me see if I can maybe open it in a new tab. Let's take a look. Oh yes, look at this thing, right? So black is outbound. This fuchsia pink, whatever, is inbound. What are we seeing? What are we seeing? Well, we are seeing that these states are losing more people than they're gaining, right? So 69% left, 31% came in. So total is, how did they have total 31? Their math is not making sense. Call me crazy, but the math is not making sense. Anyways, we do see that more people are leaving than coming in. And they're the leading state right here. Then we have New York, Illinois, Connecticut, Kansas. I'm kind of surprised about Kansas, but Kansas, North Dakota, again, another surprise for me personally. California, we talked about. Ohio, sort of surprised. Maryland, not surprised. Massachusetts is almost like 50-50, but slightly more on the losing end of things. So, where is this important for us? Well, this is important for us if A, you're thinking of moving, and B, thinking of actually getting a piece of property, an investment real estate. So if you want to get it, I don't know that any one of these states makes sense right now, but that's just my personal opinion based off of what I'm seeing. On the opposite end, we're bucolic. I'm gonna have to research what that word means. Pastoral states. Ooh, pastoral states. Um, such as Vermont and Idaho, which have seen between 70 and 75% of all inbound moves. And let's take a look at that puppy in the thing. Ooh, hold on. Let me see. Oh, that's because I zoomed in a little bit too much. Let me zoom out back into something normal so you can actually see it. All right. So, what we're seeing is that inbound versus outbound. So, outbound is this pinkish fuchsia thing, right? And black is the inbound. And you will see Vermont is in the on this chart on this graph. Idaho, Oregon, South Carolina, Arizona, Tennessee, North Carolina, Alabama, South Dakota, and Arkansas. Very interesting. So, are they moving from North Dakota to South Dakota? I don't know. I mean, I I'm trying to kind of be funny, but no, I'm actually not. So you will see that this is where folks are moving into. Now, of course, this is the data from March 1 to August 19, and it could shift obviously over time. It's never going to be stagnant, but people are basically departing states. And see now when I did the zoom out piece, then we can't read it. So I'm gonna zoom back in so we can actually read this stuff and see it. Okay. A hypothetical move from New York City to Vermont is priced at $773 if you were to rent a U-Haul, which, if you're an international viewer, which some of you are, a U-Haul is basically our own place where you can rent a truck and you sort of self-load it and self-drive it across the country and then self-unload it. And it's probably the cheapest, sort of most economic way to move from one place to another, and it's called U-Haul because that's the name of the company. Now, of course, you could hire movers to help you like pile stuff in and stuff, but that's basically what it is. And so it will cost you $773 to go from New York City to Vermont. Now they don't specify where in Vermont, but let's just pretend that that's what it is. Now, if you wanted to go from Vermont to New York City, the cost is only $236. So it's very interesting to kind of take a look at that, because that shows you where people are moving to. And so if you see that the price in one direction is much higher than the other direction, you know where people are traveling. So if you don't know how to research stuff, simple thing is go to U-Haul and play pretend that you are going to rent a truck to move from one place to another, and then take a look at the prices. And just make sure you get the same size truck, obviously, so that you're comparing the same thing. But that is going to give you a very clear picture of where people are going. I mean, I remember when I was going from, where was I going? I was going from Georgia to California, and truck price was ridiculously high at that point in time. And when I looked at the reverse, it was like a tenth of the price. I'm like, wait, what a minute, like what's going on? And I didn't quite understand it, right? But now I do understand it, because that's been years and years and years, and I've been studying for all those years, so now I know it. And now you know it too. United Van Lines reported back in its latest annual mover study held before the beer overflow came through our way. The exodus was already present, as New Jersey 68.5%, New York 63.1%, and Connecticut 63% were all included among the top 10 outbound states for the fifth consecutive year. Primary reasons cited for leaving the Northeast back in January were retirement at almost 27% and new job company transfer at 40% or so. Now we can add something else to it, which is escaping the crowds, high taxes, and all kinds of other things. So you can see this map right over here. Let me see if we can open it up in the new tab thingy. Oh, I gotta zoom back out, y'all. I gotta zoom back out. And let's take a look at this. Can you see this whole thing? Yes, look at this. This is beautiful. So now we get to see high inbound. Well, you can see where high inbound is. We see Vermont up here. This is South Carolina, Florida, Idaho, Washington, and Oregon. Those are the top places where people are moving. How is my U.S. geography, right? Doing pretty well. Doing pretty well, Nev, huh? Now, high outbound is this darker colors. So we see Illinois right over here. Um, Hold on, what is this? What is this? This is Ohio, right? This should be Kansas, New York, Connecticut. Uh, what is this? Delaware? No, Delaware is down here. Oh no! Oh no, Nev! Oh no, Nev! Anyways, no, that's New Jersey. Duh. Hello, we just talked about it. Wow. All right. Anyways, you can kind of see that's where people are mostly leaving out of. The dark blue is where people are mostly leaving into. Then the lighter blue is medium inbound, right? So these are the states where you can see some of them are no surprise, like right, like Arizona and Texas, for example. Nevada is sort of surprising, but not really, right? Then you have the Tennessee and North Carolina, right? That's kind of where we are. That's the South Dakota, right? Uh, mm, no, I can't remember. I can't remember. Ah, all right, all right. Forgive me, I can't remember. But you can see that that's kind of the sort of like medium inbound. Now the light yellow is medium outbound. People kind of like leaving, right? And then you have these gray areas where it's sort of like flat. So if we were to think through investing in an asset that is immobile, like real estate, where would it make sense to invest, right? Well, you don't want to do it in the dark yellow states because people are leaving, right? So that's something that kind of has to fall off of your radar. Again, not financial advice, just thinking out loud here with you. Then you also want to consider high taxes and troublesome sort of eviction laws and that kind of stuff. I assure you, a whole lot more states will sort of fall off as well. And then you want to look at the states that are either medium inbound, right? Those light blue states, high inbound, these dark blue states, and also these sort of like flat states that not a whole lot of in or out is happening, that kind of fulfill. Now, when you do that stuff, that gives you a great way to find your next place to invest in if that's something that you want to do. Again, not a financial advice, just an idea from a random guy that you're watching live on onedealaway.com/live, or if you're watching a replay on YouTube, which is, by the way, if you are watching on YouTube, do me a huge favor, smash that like button, do share the video, do subscribe, do hit the bell button, and I will see you tomorrow. Until then, stay forever money blessed, and remember, you are only one deal away.